Welcome back to Echo Trade. It's Jeff Roth. And again, I'm here with Justin Carbonneau from Validea Capital Management. Justin, how's it going, man? Good to see you.
Jeff, good to see you too. Thanks for having me.
Yeah, so today we're talking about the Healthcare Innovators portfolio offered by Validea within Echo Trade. Quick background on Justin and the team. Justin's a partner at Validea. He's a host of the Excess Returns podcast. If you haven't checked it out, definitely recommend you go do it. And rounding out the team is John Reese and Jack Forehand. Jack is heavily certified CFA and CFP, and John's got the education background and the brains, more than me, at least, with MIT and Harvard degrees. But anyway, Healthcare Innovators. Let's talk about it. I'll let you kind of give you the floor. Justin, tell us, kind of what's the purpose of the portfolio? What are you guys trying to accomplish? Obviously, it's a little bit of thematic portfolio, kind of focused on the healthcare sector. So what's kind of the goals that you guys are trying to accomplish within this specific strategy?
Yeah, so on the Echo Trade platform, we have really two different types of strategies. We have strategies that are looking to benefit from some secular trend in the markets and in the economy. And then we have what I would consider like stylistic themes, I guess. And, before in other interviews, we were talking about the dividend achievers. We have the wide moats, big brands. But this one is more thinking about what part of the economy and what sector in the US economy is likely to have a tailwind of good business profits and companies doing well in our economy and other economies around the world. And I don't know, I live in Connecticut. I know you're in Southern California, Jeff. The way I see it, and I think the data would tell you this, that spending on healthcare in this country is something like 20% of GDP. With the aging population and the other unfortunate health things that a lot of people have, which, I'd rather see healthier people, but the trend is more going the other way with different, obesity and other things. And that lends itself to more spending on healthcare. We have an aging demographic group that is probably a 10 to 25 year or maybe 20-year tailwind in terms of baby boomers, at the later stages of their life, needing healthcare, knee replacements, all this type of stuff like that. So this strategy, this portfolio is really trying to take advantage of that, but also saying that fundamentals matter. And we want to make sure that if we're investing in this space, we're buying the most fundamentally sound companies possible using the system that we've developed at Validea Capital, and then having a disciplined way that new companies can come in to the portfolio over time. The word innovators is in the portfolio. This isn't like buying the hot biotech that has the potential blockbuster drug. Because of the way we pick stocks, and we'll talk about this maybe in a minute, there's going to be a lot of established companies in the healthcare space that come in, but then there'll be some, small and mid caps that maybe are unheard of, that maybe those will be great opportunities. That's where a lot of the excess return could come from if these names actually are very successful. But I just want to make sure the word innovators can kind of sort of get lumped in like with disruptors or something. And that's really not the type of stocks that are being held in this portfolio.
Yeah. So you're not, kind of taking the place of a VC where, kind of their business model is, you have 100 investments and one of them becomes a unicorn and that pays for everything. By no means that's what you're kind of looking for. So innovators that they are generating innovation, but just the nature of the companies, they're more, kind of companies you would understand the name, kind of large cap, mid cap companies. Does that sound about right?
Yes. Yep. Absolutely.
Yeah.
Yep.
And so within, obviously we're in the healthcare, sector. Are there kind of subsectors or different types of companies or areas within the healthcare kind of umbrella that you guys like more than others, or that kind of take up more of the portfolio and the weighting versus other areas?
Yeah. Right now, the portfolio definitely has recognizable drug makers in there. Firms that I know people would have heard of because these are household names. And they're in the portfolio because they do score highly based on their quality companies. So the valuations they're not super cheap, And they're not deep value. They're more like on the quality spectrum, strong balance sheets, consistent growth, above average return on equity and return on capital. Those types of characteristics are why those names are in the portfolio. If you think about, like, going back to the innovator thing for a second, a lot of the companies in the biotech, they're just not profitable. Yeah. So, we need to see our system. Profitability is very important within how companies are scored throughout all the different fundamental models we run. So just to take a step back too, so we run 22 different strategies based on legendary investors and academic research and books and academic papers that have outlined fundamental strategies and stock picking methods that span the value, the growth at a reasonable price, the growth, momentum, low volatility, high quality. So we have a lot of different models we run, and then we rank all these stocks. So we're just taking stocks in the healthcare industry or sector and ranking them all, and then saying what 10 securities score highest based on a consensus rank of all your strategies. And so it's a nice cross section of names that are held in the portfolio, but there's definitely some large cap recognizable, what I would consider blue chip drug companies, pharma companies in there.
Yeah, and we've talked about, kind of your guys' process, which I love. It's, you're not trying to create your own model and say you're smarter than the average bear, or, and create something brand new and recreate the wheel. You're just saying there's a lot of smart people out there that have created, their own screening processes, their own analysis, their own strategies. And you're just leaning on their expertise, but you're aggregating, a multitude of those strategies to be able to kind of filter through the audience and the universe of portfolio or stocks that you could be investing in, and then choosing the best of the best from all that. So, I mean, with that, is that pretty much what is driving the 10 stocks in the portfolio? Or are you really, like you said, you have some pharmaceuticals in there. You talked a little bit about biotech. Are you looking at all at a certain kind of, broader top down industry specific areas that you want to be in? Or is it really just, hey, here's the universe of companies within the healthcare umbrella, within that sector, and then you stream them through your analysis, and whatever comes out is what you guys are kind of putting in the portfolio?
I mean, that is, yeah. So it's start with healthcare, run those names through the strategies, what ones score highest, rebalance the portfolio a few times a year, let the disciplined, systematic nature of getting the best names in contribute to what's going to drive the performance of the strategy. And sometimes we'll be adding stocks because they're super cheap. Sometimes we'll be adding stocks because they're super high quality. Sometimes we'll be adding stocks because the momentum is very strong, and the future momentum looks, momentum as a factor, recent price strength or price momentum tends to lead to short to medium term future momentum. So all these are like things that I'm talking about are like factor investing, but we just do factor investing differently in the sense that we build these multi-factor models, and then we're combining them together in such ways where we're trying to select stocks that have high scores for multiple strategies. It's putting the odds of those stocks being good performers in our favor, and holding a basket of them, being consistent and disciplined over time with the rebalancing is where we hope to sort of find a little bit of an edge, drive value, and also benefit from the tailwind of investing in the healthcare sector.
Yeah. And then kind of talking about the process and the strategies that you guys are funneling, everything through and screening the names, you don't necessarily have, a risk management strategy in the sense of, hey, this is what I've kind of created to determine if I'm going to exit a position. You're really relying on the systems that you have in place to say, hey, this company scored, highly in the top 10 percentile or whatever, and they're in the portfolio. But no matter what you do, nobody has a crystal ball, and that's not always going to be correct. But with that rebalancing that you guys do on a regular basis, then somebody else scores higher, you're going to pull the other company out, and you're going to put the other company in. Is that how the process works?
That's exactly right. Yep. Yeah. It's kind of like getting a lot of, it's kind of like getting like touches. It's kind of like you have this portfolio of stocks. Some are going to be winners, some are going to be losers. Hopefully you can hold on to your winners and The losers get called out because something in the fundamentals deteriorates, and so you want to replace. But you want to get more touches on the ball, right? That's more opportunities that you get. And the other thing is, just because you're down on a position doesn't mean like that position can't come roaring back either.
Yeah.
So you got to be mindful of that. But it's about letting the system work for you over time, and also like the importance of maintaining discipline with that. And that's sort of what we're all about, is this disciplined, repeatable, fundamentally based process. And then, leveraging it, as I opened up at the beginning, in different ways on the EchoTrade platform that people can kind of pick and choose from and find what's best for them.
Exactly. And then just kind of, with that in mind, if you're looking at investing in, the Healthcare Innovators portfolio, especially with the thematic, nature of the portfolio, like you said, we're trying to kind of, take advantage of the tailwinds of an aging population, of the baby boomer population, and some of the innovation that's already occurred on the healthcare side. But with that, that's a longer term kind of outlook. You could have with the concentrated nature of the portfolio, kind of, spikes in outperformance in certain shorter time periods, right? But it's probably something that you'd probably want to look at more from a longer time period to really take advantage of the thematic tailwinds within the healthcare industry. Is that correct?
Yeah, and I think that's correct. And I'd like to think that, it'd be great if all investors took, with any strategy, whether it's ours or anybody else's, you want to try to take a long-term view with these. You want to, I would think if you were using this offering, you'd want to try to be piecing together the strategies that you're looking to hold for 3 years or longer, 5 years maybe.
Yeah.
If you can maintain that type of time frame, if you're dollar cost averaging into these things, because all these strategies are going to go through their periods of ups and downs. It can be sector related, it could be thematic related, it could be just market related. The market could go down and it's going to bring 60 to 70%, maybe even more of stocks down with it. So you always want to be investing for the long run, taking the longest term view possible. And that's how, at least we believe you're successful in the market. It's one important ingredient to success.
Yeah, no, I can remember countless times anecdotally where friends and other people that we know, just conversations, through the entire, kind of 2009 through 2020 bull, where people, no, I'm taking my money out, I'm pulling out here. I see headwinds coming to us, and it's the wrong decision. And that was in like 2013, 2015, like, come on. And so it's really tough to make those decisions individually when there's a lot of noise. So it's wonderful to be able to, hey, I'm going to rely on Justin and the strategies that you guys are putting in place and not have to think about it too much myself.
Well, and on that point, and I think it's an important one, and when you make a timing decision like that, there's two decisions. There's the decision to get out, but the decision to get back in. Yeah. And a lot of times, from what I've seen, investors are not good. A lot of times they're making the decision to get out at or closer to the bottom. That's usually like the capitulation point where most of the pain's probably done. Yep. And, but where a lot of investors then really make the mistake is like, maybe they get out and they save themselves a little bit of losses, but then they're too worried on getting back in.
Exactly.
And I've seen investors wait years on that, and that's cost them dearly. So maybe that's a discussion for a whole nother episode or segment or whatever we're calling these.
Absolutely.
But the market timing is very dangerous, very difficult, and most investors hurt their returns doing that. So
no, 100%, especially when you're doing it individually and this is not what you're doing on a regular basis. You don't have a set strategy where you can actually eliminate your emotion from that decision-making process. So that's what I love about EchoTrade. It's like, listen, not everybody is a professional. Not everybody does this on a daily basis, what they went to school for, like you guys and your team. And so people can just rely on the expertise from Justin and his team and their processes and their strategies. So, and again, investors can go take a look at, and they can copy the portfolio and subscribe to it and unlock the positions of the Healthcare Innovators portfolio within EchoTrade. Justin, always a pleasure. Thanks for being here. Thanks for the partnership.
Thank you, Jeff.